Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this weekly stock market update and industry sector review for the week ending Friday, March 16th, 2018. Before I jump into the charts of the U.S. stock market and industries, I'd like to begin with the quote of the week. This week's quote is from Michael Jordan. Many of you know who Michael Jordan is, but I'll give you a few facts. He played 15 years for the Chicago Bulls and Washington Wizards, one of the longest careers in basketball history. He's known as the greatest basketball player of all time. Michael Jordan once said, "Obstacles don't have to stop you. If you run into a wall, don't turn around and give up. Figure out how to climb it, go through it, or work around it." Those are some wise words from Michael Jordan. Well, we've had a week of continued volatility and much uncertainty. The Dow and S&P have kind of trended sideways. The NASDAQ is at highs, which you'll see. But let's just jump right in and begin with the Dow Jones Industrial Average chart. All of the charts you're about to see are 6-month charts from September 15th, 2017 to March 15th, 2018. Let's begin with the Dow Jones Industrial Average here. You can see the price of the Dow, which is the black line, has been extremely volatile and extremely indecisive. We are currently sitting exactly where we were a month ago, but you can see by the chart it has been quite a roller coaster ride. The 5-day moving average in red is right on top of the 20-day moving average in blue, indicating much uncertainty. But the price of the Dow, which is the black line, is below the 5 and the 20-day moving averages, indicating some short-term weakness. The 20-day moving average in blue is below the 50-day moving average in purple, so that indicates intermediate-term weakness as well. Let me point out a few other things that the Dow Jones is struggling with. For that, I am going to switch this chart to a candlestick chart. And each one of those red and green rectangles represents one day. Represents the high, low, open, and close of the Dow Jones for each particular day. Now, if I draw a line from the highs of the Dow from January 26th to the next high and to the next high, you will see that the high price of the Dow for, well, we got January 26th, February 26th, and March 12th. So for February 26th and March 12th, they perfectly touch this top resistance line, and the Dow is struggling to get above it. Now, one other thing I want to point out is the support trend for the Dow, and for that I'm going to connect the lows of each of those days, and it's amazing how it lines up. So the low of February 9th and the low of March 2nd line up almost to the penny with March 14th and March 15th. So we have an interesting situation here, and that is, which direction is the Dow going to go, up or down? We are running out of time, and we only have a few more days till we reach the end of that triangle, and so we just need to wait and see, and perhaps we'll be stuck in the triangle until the Federal Reserve meets next week, the week of the 19th of March. So let's just keep an eye on it. I will post some information on social media once there's something worth talking about here. Here's the S&P 500, which is just a little stronger than the Dow Jones Industrial Average. You can see that the 5-day moving average in red is above the blue 20-day moving average, indicating some short-term strength, but the 20-day average is still below the 50, indicating some intermediate-term weakness. Now the 20 and the 50 are starting to converge, which is mostly a sign of uncertainty in the intermediate term. We'll just have to keep an eye on it. Let me do for you what I did on the Dow chart and connect those highs and lows, and you'll see what the S&P 500 is dealing with. For that, let me switch back to the candlestick chart, and let's connect those highs from January 26th and February, and you will see exactly what is going on there, and we'll connect those lows as well. For that, I'll click that, and then I'll click the lows. All right, so the S&P 500 had its high on the 26th, and then its second or lower high on February 27th. We broke above that on March 9th, and then the S&P 500 just kind of ran out of gas, and you can see that on March 15th, it just came down and gently touched that line. So this line, which once was resistance, has been broken, and now it's acting as support as of the 15th of March. It's just sitting, it came down, touched that line, and then pulled up and closed above the line and above the 50-day moving average as well on the 15th. So here is the support line, and currently it's still holding, obviously. This is a different chart, different looking chart than the Dow. We'll have to just keep an eye on it and see if this breakout over the last week turns out to be a false breakout, and that means that if this price of the S&P drops back below that red line up here, that would be a false breakout, and that would be a very bearish indicator. Here's the NASDAQ 100 chart, and this is the strongest of the three. You can see that the 5-day moving average in red is way above the 20-day moving average in blue, and the 20-day average is above the purple 50-day moving average. So we have short-term strength and intermediate-term strength for the NASDAQ 100. And you had the prior high on January 26th, the big sell-off. We tried to get back up to an all-time high here, but failed and came back down. But as of March 9th, we broke above the prior high to make a new all-time high, and then we had a sell-off on the 13th, 14th, and the 15th. So we'll just have to keep an eye on it here. This is just a sign of exhaustion after running up so fast, but everything currently still looks pretty good for the NASDAQ 100. Moving on to the industry sectors, we'll start off with materials, and I'll just jump through this real quick. We got a 5-day average that has topped on the red line here. Let me switch that over back to a line chart for you. There we go. So the 5-day average tried to get higher and then now is rolling over. So the short-term strength indicator is still intact, but it's getting weaker by the day. And you can see that ever since March 9th, the price in black here has just fallen down again. A lot of weakness in the short term here, but we still have a strength indicator confirmation. The intermediate term is definitely weak because the blue 20-day average is below the 50-day average in purple. Here's the S&P 500 Information Technology Index, which is the main driver for that NASDAQ 100. You can see the technology stocks are currently up here at all-time highs. And the 5-day average in red is above the 20, and the 20 is above the purple 50-day moving average. So we have short-term strength and intermediate-term strength, and everything is looking pretty strong for the information technology. Here is the S&P 500 Consumer Staples Stock Index, and this index is still struggling dramatically to do anything at all. It looks really bad. If you connect the lows from back here in November and connect that one there in March, the support line there is still intact. That was in fact March 1st. So we're sitting down here in the basement, just kind of waiting. Not much good to be seen here. The 5-day average in red is still back below the 20-day average in blue. So short-term weakness, and the blue 20 is below the purple 50-day moving average quite a ways. So that's a lot of intermediate-term weakness as well. So right now, consumer staples does not look good at all. Here's the S&P 500 Industrial Stock Index, and it looks similar to the Dow 30 because the Dow Jones Industrial Average is pretty much an industrial sector index. So let's go ahead and connect these highs real quick and just see how they look. And you'll see that that top resistance line is still holding, and the bottom line here is still holding as well. So it looks pretty much just like the Dow Jones. It's converging, and it's either going to break out in the next couple days, or it's going to wait and just trend into the end of that triangle until the Federal Reserve meeting in the week ahead. The 5-day moving average in red is above the 20-day moving average in blue, but I wouldn't really give it any serious thought until we break out of this triangle. That's mostly indecision here, and the blue 20-day average is pretty far below the 50-day moving average, indicating intermediate term weakness as well. So lots of weakness here on the industrials. Here is the S&P 500 Utilities Stock Index, and I'm excited to say that something actually good happened in this Utilities Index this past week. We had a little bit of a breakout. We're still struggling to get back above these prior highs of February 23rd, but the 5-day moving average crossed back above the 20-day moving average after getting just beaten pretty badly since it crossed the first time back on December 5th. So the 5-day average is back above the 20, indicating short-term strength, and we're still in the intermediate term weakness stage here because the blue 20-day average is below the 50. But another encouraging thing is that the price of this index, the black line, is above the 50-day moving average, is above the 5 and the 20. So something appears to be happening with the Utilities Index, and that is a good thing after just getting beaten up pretty bad for 2 months, 2.5 months or so. And if you draw a line from the prior highs here, you can see that most of those last two highs, this one and that one, we broke above it, and we're holding as of the 15th. So it's good. There's some signs of life here. Here is the S&P 500 Consumer Discretionary Stock Index, also known as the cyclicals, and it looks very much the same as the Dow. Let's take a look at those, the converging triangle here, and see how it looks on this chart. And you can see that the price in black is still below the declining tops red line. We had a little bit of a breakout there on the 9th and the 12th, but now we're right back underneath it again. And let's also take a look at the support, and you can see that's where we're at on support. So we're still in the converging triangle, and that means there's a lot of indecision, and the 5-day average, which is this red line in the middle, is above the 20, and the 20 is above the 50-day, which is the purple line. So we technically have short-term strength and intermediate-term strength, but as long as we're stuck in that triangle, I would just say a lot of indecision and weakness until we have a strong breakout to the upside or the downside on this discretionary index. Here's the Dow Jones Financial Stock Index, and much uncertainty here as well. We're currently sitting right where we were on February 2nd as we came down from the highs. Let's draw support and resistance lines in here and see where this index is. And currently, it's sitting right on top of it. So we had a breakout on the 9th of March, came up here, turned right around, came back down, and just barely kissed the top of this declining tops line. So now we need to see if it holds and starts to turn up and rally back to all-time highs. We'll just have to wait and see. If it doesn't rally to all-time highs and turns down, that's going to be very bearish, and that would mean that this breakout here is a false breakout, and that there's nothing good that comes of that. So we'll keep an eye on it, and let me draw in the support line and see how that one is. That one lines up about right where we are. If I switched it over to a candlestick chart, it would look a little different, but that bottom support line is still holding, and we have the short-term strength and some intermediate-term weakness, but really a lot of indecision because we haven't gone anywhere in a month and a half. Just extreme volatility. Here's the Dow Jones Oil and Gas Stock Index, also known as the Energy Index, and this thing just can't get a break. It is really suffering. We've gone sideways now for, well, since February 7th, so almost a month and a half. It has no sign of strength. It's just sitting down here in the basement, and that could mean that maybe oil prices are going lower. I don't know, but right now this thing can't get any energy whatsoever. Technically, the 5-day average in red is above the 20-day average in blue, which is a short-term strength indicator, but not as long as the price of this index is below both of those. So, and we need to really get above this high of February 26th and start making some progress to the upside to take this index seriously. And the amount of distance between this purple 50-day average and this 20-day average way down here indicates very large amounts of intermediate term weakness. So we're just sitting on the same line that we were way back here on September 22nd of 2017. So poor energy just cannot get a break. Here's the Dow Jones Transportation Index. It's kind of just trading sideways too. The prior high from March 13th could not get above the high of February 26th, which that in itself indicates a lot of weakness. We do have the blue 20-day average below the 50-day average in purple, indicating intermediate term weakness as well. But the 5-day average is technically above the 20, so that's short-term strength, mostly from this little rally we had that ended on the 9th of March, and then it came back down again. So really it's just trending sideways for a month, month and a half. And if we draw in some support and resistance lines, you can see here that it's above that declining tops line. And let's go ahead and draw in a support line here. And that's obviously still holding. It's above a converging triangle. It's just not showing any strength. It's up here and just kind of hanging out. So we need to give transportation a little more time to figure out what it's doing, and we'll see where we go in the week ahead. Here is the Dow Jones Healthcare Stock Index. It moved a little bit over the last week. We're still below this February 26th high, which is not too encouraging because it tried to break out of that on March 9th, but then came right back below that prior high. So we'll have to wait and see how it does, but it did get above it, so maybe that's just a pause. The 5-day average in red is above the 20-day average in blue, so you have short-term strength, and we have intermediate-term weakness, though, because the blue 20-day average is still below the purple 50-day average. So a lot of indecision and some caution warranted here until this thing really starts to get back above the March 26th high with some conviction. The final chart of the day is the Dow Jones Real Estate Stock Index, and it had a little bit of a run since last week, but it kind of ran out of steam here on March 12th and is forming a possible top here. The 5-day average in red is above the 20-day average with some conviction, so we have some solid short-term strength as it came off of that low on March 2nd with a nice rally getting above those two prior highs. So we'll see if it can get above that 50-day average in purple here, which brings me to say the 20-day average in blue is below the 50. So that is still intermediate term weakness, but we do have the short-term strength. So we'll have to keep an eye on it and just see if real estate can continue higher. One other thing to mention on this real estate index is that there is, if you connect the highs from here, December 18th, to the high, January 31st, we have broken above that declining trend line, so that is encouraging. And so we may be seeing more move to the upside. The next week will tell us a little bit more about that. Thanks again for watching this market update. I hope you found the charts and information useful. The next week will again be another week of drama. It'll be interesting to see how it all plays out. We have a Federal Reserve meeting coming up in the week ahead on Tuesday and Wednesday, which will definitely put some volatility into the markets. Before you go, please do me a favor and click the subscribe button on this YouTube channel, and then click the little bell next to it so you'll be notified when additional videos are posted. And in the summary description of this YouTube channel, you will find links to the Facebook, LinkedIn, Twitter, and website for Christensen Wealth Management. If you use social media, please go to those links and like or follow Christensen Wealth Management so I can communicate with you as effectively as possible. Have a great day, and I look forward to seeing you again in a few days. Bye-bye.